He
Sure.
bought Bitcoin the night of the election. Okay. It's not $68,000 anymore.
Not a bad
That's
move.
up a lot, right?
Yeah,
That's a
not a
big
bad move.
That's a big move since November. And
Yeah,
so,
sure.
and there are other, I mean, XRP's up 5 times that much. Dogecoin's up 3 times that much. So there have been massive moves in anticipation of all the good stuff. I think humans are going to human. I think we'll push prices too high. So I don't think we've topped. I think, my own personal opinion is 150 to 180K Bitcoin, and you can do the math or anything else, is the top of this cycle. And that would be about 1.5 times fair value.
Since assuming office on Monday, President Donald Trump has implemented several significant initiatives aimed at reshaping the cryptocurrency landscape in the United States. These actions are expected to have profound implications for crypto asset prices in 2025 and beyond. On January 23, 2025, President Trump signed an executive order titled Strengthening American Leadership in Digital Financial Technology. This order establishes a working group tasked with proposing new regulations for digital assets and exploring the creation of a national cryptocurrency stockpile. The group, led by the White House's AI and cryptocurrency czar, David Sachs, includes leaders from the Department of the Treasury, the Department of Justice, and the Securities and Exchange Commission, SEC. They are mandated to present a comprehensive report with regulatory and legislative proposals within 180 days. The same executive order explicitly prohibits the establishment of a U.S. central bank digital currency. This move aligns with President Trump's stance against CBDCs, emphasizing support for decentralized cryptocurrencies and stablecoins instead. President Trump has appointed several pro-crypto figures to key positions within his administration. Notably, David Sachs has been named the White House AI and cryptocurrency czar, responsible for developing a legal framework for the cryptocurrency industry. Additionally, Paul Atkins, known for his crypto-friendly views, has been nominated to lead the SEC. Mark Uyeda, who got the nod for SEC acting chair, has repealed the highly controversial Staff Accounting Bulletin 121, which prohibited banks from being able to custody crypto assets for their customers. In a recent interview, Morgan Creek Capital founder, CIO, and managing partner Mark Yusko discusses the potential impact of these developments and what they would mean for crypto asset prices going forward. Yusko believes these developments will drive crypto prices higher in 2025 and beyond. He is especially bullish on Bitcoin, which he says could climb as high as $180,000 before the cycle ends. As we bring you clips from Yusko's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for the support and enjoy the video.
Yeah, look, I've talked a lot about this lately, and in that, none of us really know whether he has that power through executive order to establish any sort of strategic reserve of any asset. So it appears, and again, I'm not an expert on this, but it appears that it has to come through Congress.
Okay.
There are specific bills in front of different groups, one led by Senator Lummis and another led by, I can't remember the name of the senator, that are moving toward trying to create this strategic Bitcoin reserve.
Yeah.
Now, those are specific to Bitcoin. They have nothing to do with any other tokens. There's been talk about Trump making US-based crypto. Now
Right.
we're talking cryptocurrencies, not Bitcoin. Bitcoin is a cryptocurrency, but let's differentiate. Cryptocurrencies that are US-based, make gains on those tax-free. And of course, all the Hedera and the XRP and the Cardano people were, oh, that's going to be great. And it could be great, but why would he do an executive order like that? Why would he, and again, I don't even know if that's in his purview, but why would he push for that regulation? Well, if he and his family have suddenly started to acquire crypto assets, it's logical, maybe not ethical or moral, but it's logical that then he would be in support of making those things more profitable. Is it true that the Cardano crowd, the XRP crowd, leadership, meaning the people who own most of those tokens, have been lobbying really hard on Washington, not just Trump, but the previous administration, to get favorable positions? The XRP people want the banking system to use it as a base layer, like to replace SWIFT. Is there a world where you could see enough, lobbying being done that gets proposed by? Sure, I could see that. I don't like it personally, because I don't think it's decentralized. I don't think it's the right answer. To me, Bitcoin is the base layer, and then we build everything on top of that is a better solution. But again, long-winded way of saying, I think there's a lot of things happening. I think very little will be done by executive order. It has to go through the proper channels, but that doesn't stop the speculation. Historically, we as a firm have favored the larger, more established protocols. We own a lot of Bitcoin. We own a little tiny bit of Ethereum. We own a fair amount of Solana, although we sold most of that historically. We don't own XRP. We don't own Cardano. We don't own Hedera. That doesn't have any information content other than the fact that when we talk to founding groups, we have not met very many founding groups that are working on those platforms. If suddenly somebody were to say, yes, XRP is going to replace SWIFT and Bank of America is going to use it and JP Morgan is going to use it, if, and that's capital I, capital F, if I can see a way that some of the revenue that would be saved by using a better, faster, cheaper solution could accrue to token holders, then I want to own that.
Yeah,
the problem with most of these utility tokens, as you know, Paul, is they don't get any of the cash flows, right? The whole ICO was all about speculation without equity ownership, a claim on cash flows or debt. I'm an old-fashioned investment guy. I like to own cash flows. I like to own things that accrue value. If we have other token networks that become usable on a global scale, and somehow the cash flow accrues to token holders. So there's no question that any change in the rules, whether it's accounting rules, which would allow banks to hold these assets that under current accounting laws, if a bank owns this asset, it hurts their capital base. And that's true of risk assets. That's why they don't do a lot of private investments or venture capital, because there are accounting rules that, mark-to-market rules that, so if they change those rules or make certain assets acceptable as depository investments like cash or other, then clearly that would change the supply and demand. If we are trading an asset, if banks are simply trading, that is really no different than Coinbase or Kraken or Gemini trading, right? It's just a transaction business and you're taking a spread. So would profit be made? Sure. And would the value of a bank go up if they could, arb the spread on crypto? Sure. One of the challenges of all of this is who's going to make the rules, who's going to decide which of these proposals we follow. Is it going to be like the bad old days where he or she who pays the most to lobbyists gets what they want, versus, hey, let's evaluate all the technologies. Let's look at the world like a business. And so if we actually did that with evaluating the technology of Web3 and blockchains, and we integrated that into the financial services system rather than a pay-to-play, bravo, that would be great.
The repeal of SAB 121 marks a transformative moment for the cryptocurrency industry. By removing the restrictions and accounting guidance imposed by SAB 121, banks and traditional financial institutions now have the regulatory clarity needed to fully embrace crypto services. This change dismantles significant barriers that previously hindered institutional involvement in the crypto market. With established financial entities now able to offer services like custody, trading, and payment solutions for digital assets, the path to mainstream adoption has never been clearer. Banks can provide secure and regulated access to cryptocurrencies, reducing entry barriers for both retail and institutional investors. Many individuals and organizations that previously hesitated to engage with the complexities and risks of decentralized platforms now have a trusted and familiar gateway through their financial institutions. At the same time, retail investors will gain simplified access to cryptocurrencies through banking apps and integrated financial products, accelerating broader public adoption. During his interview, Yusko also talks about real-world asset tokenization, a somewhat controversial issue in the crypto and general asset space, which Yusko says is inevitable. Let's get back to the video.
I've said, let's tokenize the world since 2018.
Yeah.
I've been working on this actively as my career since then. And the idea that, and I've said it, and he's not quoting me, but he actually has probably seen the clip where I say every stock, every bond, every currency, every commodity, every piece of real estate, every piece of art, every collectible car, every case of fine wine, every private business, all 700 trillion with a T, 700 trillion, all of it will eventually someday be a token. And a token is not a little piece of gold, or, they always make it a gold coin. Like there's no gold and there's no coins. A token is a line item on a ledger. And why does that matter? We have ledgers, we have databases. Well, no, we have centralized databases that are controlled by certain parties. In the decentralized world, that is blockchains, we have immutable, permanent truth instead of trust. The trust industry, banking industry, brokerage, insurance, et cetera, 848 years, it's had a good run, but now it's on its way.
Time to move, yeah.
And that's a good thing for the long term. As he said, 7 trillion with a T, 7 trillion every year is extracted from you and me and everybody else in fees to the current banking system and brokerage system to ensure trust, right? I have stock at UBS, right? I have a family harmony account with my brother-in-law. Today, there are paper stock certificates in a file cabinet in Dallas, Texas at DTCC, and they're in the name of UBS. They're not in the name of Mark Yusko. Mm-hmm. And I have to ask permission to UBS to sell those stock certificates to you, and they take them out of the file drawer and move them to your file drawer at Merrill Lynch, not in your name, but in Merrill Lynch's name. That is 400-year-old technology.
Yeah.
There are 4 different fees.
Yeah.
Instead, with a tokenized security, I can send it to you with a couple clicks on my phone, and it's done.
Yeah.
And so Larry's 100% right, and I'm in violent agreement because I've said it before, that this is coming. And the banks, the brokers are gonna fight it. Why? Because that 7 trillion that I want us to reclaim happens to be their revenue. TradFi, CFI, centralized, DeFi. Ultimately, everything's DeFi. The whole world is decentralized and tokenized.
Yeah.
But it's not going to happen overnight.
I want to get your opinion on this, though, and that is the Trump token. So, with now all of this shift in the administration, do you think these meme coins will get more traction or less traction?
Well, there'll be more of them. But at the end of the day, there's only so much money.
Liquidity-wise,
right? That amount of money is controlled by central banks. We have liquidity rising or falling, and there's only so much. And so we saw that with the Trump token, right? When the Trump token was out, it went up, and then when the Melania token came out, some people sold some Trump and bought some Melania, and
swapped.
And there's only so much money. So is the meme coin phenomenon a little bit of sports betting and Las Vegas? Absolutely. Is a little bit of it that the American dream of buying a house and having your real estate appreciate kind of gone for a lot of young people because housing prices are so expensive. So they're like, hey, I can make generational wealth by speculating. Donald Trump is right in the sense that he ducked the question, are you going to do more of these?
Yeah.
In theory, according to I think it's called the emollients clause, he shouldn't be able to do it now that he's been inaugurated. Before inauguration, he was right. Now, are there limitations on his direct family? I don't know the answer. How about people hired by his family? I don't know the answer. So did he make a lot of money, like personally, when all the security detail stayed at his resorts when he would go golfing?
Yeah.
Yes.
Of course.
Should that have been right? I don't know. But Portnoy says something else different, which is, I could do this. I'm popular. Sure. People know who Dave is. But just because I know who Dave is, I'm not buying Dave coin. I'm just not. I have no interest in it. And some people would.
Not buying
some people
Dave
would.
coin.
And the people who, if he did it, and I love the dilemma he was having, which is the reason you can create this illusion, and I call it an illusion of wealth, is if you do what's called a free and fair launch, which means you distribute all the tokens equally to members of some community, then it really is only going to increase in value on normal supply and demand.
Yeah, that's the market conditions for sure.
If one party owns the majority of the coins,
right,
and a limited amount of float exists, that supply demand gets thrown out of whack. And then what happens is the big institution occasionally feeds the ducks. But just holding an asset that you own the majority of, that's not illegal.
President Trump announced the launch of a cryptocurrency named Trumpcoin on Monday, January 20th, 2025. Branded as a token for supporters and backers of his political ideology, the coin gained massive attention and quickly surged in value. Within days of its debut, Trumpcoin witnessed extraordinary trading volumes, reaching unprecedented highs for a new entrant into the crypto space. Within 48 hours, the token's price skyrocketed by over 700%, with its market cap briefly surpassing several established altcoins. Social media platforms were inundated with discussions about the coin, ranging from enthusiastic endorsements to skeptical critiques. The trading frenzy was driven primarily by retail investors, many of whom were drawn in by the celebrity association and speculative hype. Crypto exchanges that listed Trumpcoin reported liquidity surges and record-breaking new user signups. Despite its initial success, Trumpcoin's launch has raised significant concerns within the cryptocurrency community and among financial analysts. The dramatic price movements of Trumpcoin have fueled fears of speculative bubbles. Critics argue that Trumpcoin's branding and political affiliations could undermine the broader cryptocurrency market's credibility. Regulators have already hinted at possible investigations into whether the coin's launch complies with securities laws. A regulatory crackdown on Trumpcoin could spill over to affect other cryptocurrencies. Critics also worry that the meme coin's success will bring about the proliferation of branded or celebrity-backed tokens, which could dilute the market, making it harder for genuinely innovative projects to gain traction. A potential flood of similar tokens might also confuse new investors and erode confidence. Do you share these concerns about the project? Please drop your replies and comments on Mark Yusko's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.